The last video talked about the BTC price after the record high, vendor availability, and market changes. In this video, we're going to talk about how the price of BTC changes, ETF fund flow performance, related characteristics of the euphoria phase, and some evaluation indicators. In early March, the price of BTC broke through a new high of $73,000. At the same time, there is supply from long-term holders. They are also pouring into the market as they sell aggressively. This seller situation has created an oversupply. This led to a period of price correction and consolidation. And over time, this situation has brought about lower BTC prices. And the seller's investment potential is exhausted. This is starting to give way to a new market movement where assets are starting to accumulate again. We can see this in the flows of the BTC ETF. Funds in the BTC ETF turned into net outflows throughout April. As the market sold off, the price of BTC fell to a local low of around $57,500. ETFs have seen huge net outflows of up to $148 million a day. However, this proved to be only a short-term collapse in confidence. The trend has since reversed sharply. In the penultimate week of May, the BTC ETF experienced huge net inflows of $242 million per day. This suggests that bear demand has returned. Consider what miners have imposed on a daily basis since BTC halved. Natural selling pressure is $32 million a day. Buying pressure on the ETF soared almost eightfold. This highlights the sheer scale and volume of the impact that BTC ETF has had. But it also shows that the halving event had a relatively small impact. Return to the euphoric phase. This metric of circulation supply as a percentage of profits provides valuable information for each market cycle, and a set of recurring patterns in the early stages of a bull market. When prices try to return to previous historical peaks, the supply percentage of profits breaks through a statistical threshold of around 90%. The breach of this statistical threshold marks the beginning of the pre-euphoric phase of the market. Historically, it has attracted investors to take profits from the poker table. In this case, the selling pressure generated by the market usually comes from long-term holders. At this stage, they take the opportunity to sell assets at high prices and seek to take profits, especially after enduring the downward volatility of the entire bear market. Their urge to sell assets at this stage is particularly pronounced. With the completion of new price discovery and the BTC price breaking through a new historical peak, the market is starting to enter a euphoric phase over the next 6 to 12 months. Profit supply began to fluctuate around the 90% level. The market is still in the early stages of euphoria, but it has also been active for about 2.5 months. Another tool we can use to monitor corrections is the size of unrealized losses held by investors. Given that unrealized losses near historical peaks in prices represent local head buyers, we can assess the percentage of supply assets that fall into the 90-day loss rolling window. The aim is to assess the percentage of BTC assets that have turned from gains to losses compared to local price peaks. This video focuses on the BTC price change, ETF fund flow, and market stage characteristics. The complex situation of BTC market is analyzed. The next video is even more exciting.